U.S. stocks end a volatile session higher as investors digest key earning reports. Upbeat comments coming in from Tesla help offset disappointing forecasts for Microsoft. U.S. economy grows slower than expected in Q4. Investors now await inflation data due later tonight. Asian markets start with a modest gain while the GIFT Nifty is indicating a positive start for the Indian market. Oil prices edge higher, but gains were capped by the potential U.S. tariffs on Canadian as well as Mexican crude imports that could take effect this weekend. Gold rallies to an all-time high as Fed Chair Powell hints at cautious approach to rate cuts. L&T reports a revenue growth of 17% for the third quarter. Margins dip to 7.6%. Management tells CNBC TV 18 that endeavor is to stay on course to achieve margin guidance of 8.2% for FY25. And the budget session of the Parliament begins today. The Finance Minister will present the economic survey in the House a day ahead of the Union budget tomorrow. Hello, good morning. You've tuned into CNBC TV 18 and you're watching Power Breakfast with me, Vinny Motiwala. A quick check at the Asian markets. While Taiwan, Hong Kong and China are still closed for the Lunar New Year, we have the South Korean market, Kospi, which is opened up for trade, and a bit of a muted opening that's come in for the South Korean markets that have opened up after a week of holiday over there. We have the ASX 200, the Australian market, which is trading with some bit of a gain, as well as in terms of the Nikkei that is holding on to a mild positive side of 1.10% gains as of now. Nifty implied open indicating a bit of a muted to a slight bit of a positive, few points up. So 19 points up as of now is what the Nifty implied open is indicating. So maybe a muted to a slight bit of a positive start is what one could watch out for. Today is the day ahead of the budget, so let's keep an eye out on how the market's actually going to be moving. As of now, a muted start. But looking at the handover that we had coming in from the US markets, now Wall Street that ended higher, especially Dow Jones, that was up 168 points. S&P 500 was gaining around 31 points, and the tech-heavy Nasdaq was up 49 points in trade. The three major averages are on pace for a monthly gain, with S&P 500 up 3.2% and the Nasdaq is on pace for a 1.9% advance for the month. The Dow Jones is on track for a jump of almost 5.5%. Now, when you're looking at it, Apple shares in yesterday's trading session overnight rose nearly 3%. It extended the trading hour. It was extending in trade after those trading hours as well. The company exceeded expectations, while iPhone sales disappointed. Services revenue appeared to take a bit of a spotlight on that front. On the macro front, we had the Q4 GDP that grew at an annual rate of 2.3%, which was below the market expectations of 2.6%. Rick Santelli is bringing us a full report on the GDP data.
Let's start out with initial jobless claims, shall we? 207,000, well below the mark of 225,000 that we were looking at. 207,000 will be the smallest initial jobless claims number since the first week of the year when it was 203,000, and that was the lowest level going all the way back to February of 24. If we look at continuing claims, very fascinating. Continuing claims, 1,858,000. That's not a 34th consecutive month above 1.8 million. And something has changed. In the rearview mirror, we actually went from 1,899,000 to 1.9 million. Now, this is interesting. We haven't had a 1.9 million handle in 38 months on continuing claims. So this is a big deal. We want to monitor that, and we want to look now at our first look, as pointed out, on GDP for the fourth quarter, and the number comes in on the light side, 2.3%. We're looking for something a bit over 2.5%, sequentially under the 3.1%, which was rather robust last quarter. 2.3 would be the smallest since the first quarter of 24, when it was at 1.6. If we look at consumption, a big jump here. This is a strong number, 4.2%. That's a full percent more than we were expecting. That's 0.5% more than the rearview mirror at 3.7. 4.2 is the best since the first quarter of 23. That is something that's going to potentially push rates up a bit and argue against a slowing economy. On the price index, comes in on the light side, 2.2. We're expecting 2.5%. Now, even though it's better on an expectations level, it's still sequentially higher than the 1.9% in the rearview mirror. 2.2% equals the highest level of inflation in this regard since the second quarter of 24. And if we look at the core price index, that comes in at 2.5, exactly as expected. But once again, that's warmer than the rearview mirror at 2.2%. 2.5 would be the warmest, just like our last number there since the second quarter of last year. So we want to pay second quarter of this 2024. Now, as we look at all the data, the market really has to divine a lot of information here. Many look at expectations on anything that measures inflation, and usually on the day of trade, based on positioning, that ends up being more important. But in the macro view, and this is why many have gotten the Fed wrong, if you take a step back and just look at the numbers for what they are, they're still running a bit on the hot side with respect to pricing, and we're seeing some good numbers on initial claims. Maybe we're starting to run out of gas on the superlative performance on continuing claims. And as I said, 4.5%. Well, we haven't closed below 4.5% since the 12th of December. And if you look at a 2-year, it closed at current levels, would be the lowest yield close since about the second week of December. And finally, it's 4.5% in a 10. It's 4 3/4 on a 30. We haven't closed below that since the 20th of December.
Thank you so much for that. Now let's get to the final update in our global market wrap this morning. European markets actually closed at record highs as investors reacted to the European Central Bank's 5th consecutive interest rate cut. The ECB kicked off its first meeting of 2025 with a 25 basis point interest rate cut, and the move has brought the central bank's key overnight deposit facility rate to 2.75%. The French CAC has climbed nearly 70 points, while the German DAX has added nearly 90 points in trade. The British FTSE also added nearly 90 points at the close. The pan-European stock 600 provisionally closed 0.9% higher, notching a new record close for that exchange. But yes, that's the overnight action that we have for you all this morning. How is all this actually going to be impacting our Indian markets? We have a team of research, as always, joining in with us to set you up for trade, tell you which are the important stocks to watch out for, and important cues in the world of F&O. Vivek, good morning. And, what we saw in terms of the Nifty yesterday also managed to close in the green. Today, a bit of a muted start is what is getting indicated on the Nifty implied open. What are we watching out for in terms of a trade setup?
Well, this is absolutely right. A very important week and month as far as the futures are concerned, given the fact that we start off the February series. Now, remember, overnight cues are very, very volatile, very, very choppy. Equity markets worldwide have been doing that, especially in the past couple of trading sessions. US market ended with minor gains post that. Oil prices too managed to end slightly higher. Brent now near the $76.50 or $76.8 a barrel mark. Now, Indian markets yesterday largely higher, very choppy on the back of expiry session. Nifty, in fact, gained for the third straight session. The Nifty now above the 23,200 level, so that is something that is positive. Largely led by the strong up move that we saw in Reliance Industry. Mid-cap index ended flat, but again, it was a day of underperformance as far as the broader end of the markets were concerned. Some individual stocks, that reacted to results. Dabur, some strong commentary there. Stock, along with other FMCG players, ended near the day's highest point. Tata Motors, on the other hand, on the back of muted guidance and street fearing, there could be some demand concerns, that particular stock ended lower by 7.5%. SRF and other specialty players like Navin Fluorine ended strongly higher on the back of expectations of a better Q4 as well as FY26. And one stock yesterday that took it on the chin was Whirlpool, on the back of the fact that the parent wanted to go ahead and exit further stake in the company. Now, market spread largely in favor of the advances. Advance decline ratio strong in the 4:3 ratio. A lot of results reactions today. We will be speaking about them a lot more in depth, but L&T, Shree Cement, JSPL, all of them will react today to quite a few important results up. The GIFT Nifty, the adjusted GIFT Nifty, indicating a slightly gap up start for our own markets today.
Okay, Vivek, thank you so much for that. Now over to you, Hormaz, and which are the important stocks that we should be keeping on our radar today? Good morning.
Morning, Vinny. And start out with a big one, L&T. As Vivek was just mentioning, the big takeaway, the management maintained its guidance both on the order inflow and the revenue front. Even the core margin guidance was maintained at 8.2%, although the third quarter figure is well below that at 7.6%. And despite the ask rate being a lot higher for the fourth quarter, the management went on to maintain its guidance. Order inflows also crossed 1 lakh crore in a quarter for the first time. Tata Consumer's results were also in line with muted expectations. The India business margin concerns were offset by a strong performance in the international business, and the growth business grew only 14% compared to expectations that it will grow in excess of 20%. So keep an eye out on that. Kalyan Jewelers, of course, the stock has been in focus over the last 1 month and a half. Gross and EBITDA margins were down. They aim to increase the revenue share from the non-South markets, and the stock too has seen a battering down almost 45% from its peak. Bank of Baroda, where the asset quality improved on a sequential basis, slippages and provisions also declined. The NIMs, though, saw slight pressure both year-on-year and on a quarter-on-quarter basis. PB Fintech, it was a strong quarter for them. Premium generated was up almost 50%, as was the revenue. The margins expanded by 200 basis points. Profit almost doubled from last year. Keep an eye out on that. JSPL, where the standalone EBITDA per ton was lower than what the CNBC TV18 poll was anticipated, and since the company is in the middle of an expansion plan, the debt has seen a bit of an increase. Shree Cement, where the revenue was a miss, but the EBITDA and margins were above expectations because of lower costs, and volumes were down 1% from last year. Wipro has signed a multi-billion-dollar 5-year deal from Etihad. Ircon has won an order for 631.2 crores, where it has where its share is around 160 crores. And Polycab, where the Deputy Commissioner of State Taxes has initiated action against the company over some GST concerns. Back to you.
Okay, Urmas, thank you so much for that. But finally, we have Sudarshan, who's here to tell us what's going to be happening in the world of F&O. Good morning, Sudarshan. New sessions we're seeing in terms of starting for the Nifty options, futures. What are we watching out for there?
Good morning, Vinny. So first talking about yesterday's session, it was the third day of positive move, and buying especially seen in the large caps. That helped Sensex and Nifty close with minor gains, while mid-cap index closed flat or with a minor cut. For today, GIFT Nifty is indicating a start with minor gains. But talking first about the flows, yesterday we saw FIs selling nearly 4,600 crore in the cash market, while DIs have bought nearly 2,200 crore. Now talking about the January series that expired yesterday, Nifty saw a cut of 500 points, and it was a down move for 4th state series. In the last 4 series, Nifty has lost more than 3,000 points. And even the rollovers, Nifty January-February rollovers stands at 80.8% versus 3-month average of 75%. And remember, FI's long exposure now stands at 11%. That is at multi-year lows. Now it indicates that February series normally sees a big move on either side, whether it's a down move or plus move. Just for example, in 2024 February series, we saw a up move of 3%. In 23, it saw a cut of 2%. 22, it saw a cut of 5%. And in 2021, it saw an up move of more than 9%. Now, some of the key triggers that will be in focus in February series. First, Union budget that is going to be presented tomorrow. Second, on February 7, RBI policy will be announced. Some of the quarterly results are pending. Obviously, over the next few days, it will be coming. And another thing, Trump, whatever Trump says over the next few days, geopoliticals and AI wars. Lastly, stocks that will be in focus today, 4 stocks that are being included in F&O, and those are Torrent Power, Solar Industries, NBCC, and Phoenix Mills.
Okay, Sudarshan, thank you so much for that. But on that note, we're going to slip into a very short break. And as the countdown to the budget draws closer, we get you the key expectations from the budget on the other side. Welcome back, and thanks for staying tuned into Power Breakfast on CNBC TV18. Now let's move on and on to earnings front. L&T reported its third quarter numbers. The company reported a 17% rise in terms of revenue on a year-on-year basis. The strong order inflow was also a key highlight from the quarter. The management tells CNBC TV18 in their conference call that they expect to beat their order inflow guidance, and there is no change in their guidance parameters for FY25. Listen in to what they had to say.
We as an organization don't keep moving the goalpost. We only try to measure our performance against that defined target, because these targets are set at the beginning of the year when conditions could be very different as compared to when we move through the year. We are in a happy position today with a significant amount of orders under our belt for achieving our guidance. Even to achieve our guidance, we need possibly another 80,000 crores of orders in quarter 4. Historically, quarter 4 has been a very rewarding quarter for us. So our sense is that we are well positioned to do better than what we have guided on the order inflow, but very difficult to pinpoint a certain percentage because the size of the orders are big. As far as the rest of the guidance is concerned, I think we had guided around 15% revenue growth. We are at the moment keeping pace with that revenue growth. So with a few more months to go, I think that guidance looks safe. We had guided for stable margins as we had reported for the last year. And so far, once again, the margins have been on the same trajectory. And we do hope that we should be able to meet those guidances as well.
Moving on, the Parliament budget session will begin today with President Draupadi Murmu to address a joint sitting of both houses of the Parliament in the Lok Sabha chamber. Prior to this, Prime Minister Narendra Modi will address the media. Finance Minister Nirmala Sitharaman will also present the economic survey that is prepared by the Chief Economic Advisor Anantha Nageswaran today. Okay, let's also listen into what corporate India expects from the Finance Minister when she delivers the budget tomorrow.
I think there are three themes around which the budget, I think, needs to be, probably would be addressing. One is, I think, the public investment has to continue. So I think the infra investment. Second, I would say some effort needed on creating consumption surplus for consumption in the hands of the common person. So that will be areas like taxes and income tax, GST and things like that. And the third, I would say, is how to get private investment back in, some measures to drive confidence of the business houses and businessmen to invest more.
There are going to be disruptions because of the US tariffs, whatever we may call their initiatives. The economy also needs to pick up in terms of employment. So I think government should do something which is pro-business, which can drive growth.
The Indian economy has, of course, been the fastest growing economy for a long period of time. And anything that's fast, like a Formula One car, needs both an accelerator and a brake. So fiscal prudence is, of course, the brake. But then ambitious schemes are the accelerator. So I think what I'll be looking for is a combination of the two things. We need both. Fiscal prudence is what will set the framework for things in the long term. But at the same time, I think we need some focus on the short term to make sure that, this dramatic slowdown that we have seen in the last couple of quarters gets arrested. And of course, we need some ambitious, reforms to kickstart the economy as well. So I think it's a combination of the two things.
Okay, on that note, we're going to slip into a very short break. But after the break, we'll get to what is happening in the world of commodities this morning. So stay tuned for that. Welcome back. You're watching Power Breakfast on CNBC TV 18. Now let's go across to Manisha Gupta, who's waiting by to tell us what's happening in the world of commodities this morning. Good morning, Manisha. What are we watching out for today?
Well, we're definitely looking at the gold prices, Vinny, because we're trading at record highs onto this one. Yesterday, the New York session saw very strong gains, and the Indian markets also are trading at all-time highs when it comes to gold. When it comes to silver, we're trading at a 6-week highs onto this one as well, as the Silver Institute report yesterday suggested that the silver in the global markets is headed for a deficit for a 5th straight year for 2025. The metal prices also have seen some support. There is some short covering for copper. There is supply concerns on global mines for zinc. The zinc output has declined for a 3rd year as well. And aluminum prices in any way have been supported because of supply disruption concerns in the global markets. And it's not just precious metals and base metals. You have the crude oil prices, which also gained after U.S. said that they could exempt crude from levies and tariffs. Crude is headed for a 2nd monthly gain. The markets will now watch out for the OPEC and allies meeting that is on 3rd of Feb. And not just crude, natural gas is trading at a 15-month highs as well because of the coal demand. So everything in commodities today in Asia has started on a positive note.
Okay, Manisha, thank you so much for that. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, Bazaar Morning Call.